Hello everyone, good afternoon to everyone watching this video, um, or good morning or good evening depending where you live. I live in UK and it's afternoon here on Sunday the 24th of November 2019. Today in this video we will look at retracement and consolidation, but more of retracement. Um, in my previous video, I did promise to make a video about retracement. Okay, so let's dive into it. So retracement and consolidations. These are two of the most common structures that we see form in the market. They can be found forming during every up and down swing that we see in our chart. And in every swing itself is part of either a consolidation or a retracement on a higher time scale. For example, on a 4-hour time frame, on a daily time frame, for example, you could see a market moving, making a high or a low, but on a lower time frame, it is actually causing a retracement to occur. I will show you what I mean by that. And the thing is about retracement. One thing about retracement consolidation is most traders think that retracements and consolidations are simply just things that occur during a trend, but they are actually structures that are created by the bank traders. So the bank traders are the ones that manipulate the richer traders, you and I. Okay, so the bank traders are the ones that move the market, not us, not the richer traders. We do not have that fund, we don't have the capital, we don't have that money to move the market. We don't. The people that move the market are the bank. The bank decides what to do. So we, the richer traders, only follow, or we tend to think that we follow the bank, but not most of us do because they manipulate the market, they deceive us. They deceive us to believe that the market is going in one direction, while they've actually make the market to move in the opposite direction. Okay, so they manipulate the market every single day and every single minute. Okay, so it's our job to understand or to begin to have a knowledge and understanding of how and why they do this. Because if we don't know how and why they do this, we will continue to make mistakes and lose money. Because remember, what the banks want to do is to make us lose money for them to make more money. Yeah, that's the job of the banks. They want us to lose money so that they will make the money. Remember, if we don't lose money, the banks will not make money. So this is how Forex works. Okay, banks manipulate the market every single minute. Okay, so the consolidations and retracement are created by the bank traders taking profits of their trades. So if market is moving, making a higher highs and higher lows, like we discussed in our previous video, in an uptrend, market makes higher highs and higher lows. It gets to a point when that higher high and higher lows, the uptrend will pause, will stop. Okay. Remember, I said in my previous video that the market does not move in one direction for a long period of time. So it moves high. For example, market makes higher high, higher low, makes a new high, makes a new low, makes another high, makes another low, makes another high, and makes another low, and then makes another high, and then stops there. Okay, so when it gets to here, the banks believe the bank traders or the big hedge funds the market movers. They know for sure that by the time the market has moved from here to where it is now, they know for sure that there are loads of traders taking this uptrend. Okay, so this is when they will decide to take profits of this move from here to here. So this is when the bank traders will decide to take profits of that trade. And once they've taken profit of the trade, the market will do so, will change direction. So the market will move to the opposite direction. I'll just change this to red. Okay, so this is, remember, obviously it wouldn't be like this. So it will, you have your zigzags, okay, up and down, up and down, up and down swings. Yeah, so this is just an example. So once they've taken profit, the market will change direction. Okay, and this is where they manipulate us, the retail traders. So when this happens, we will believe the market has changed direction. So it's no longer uptrend, it's now downtrend. So this is now what they want us to believe, and then people will start selling. The retail traders will start selling. Okay, why? What they've done, what the bank traders have done, is just taking profit from this move up. Okay, so then once they've taken the profit, the market moves down, and then we start selling. The retailers, traders will start selling, believing the trend has changed. So when this happens, then it gets to a point, it might move further down, or let's say it moves further down to here. Then they will place a buy order to move the market up. So they place a buy there, and what happens is the market will move a little bit up to here. Okay, so let's say, for example, they have let's say they have 100,000. Let's say they have 1 million to trade. Okay, let's say for example they have 1 million. So they put like maybe they put like for example they put like 30K here. They move the market up. Okay, then once the market moves up, remember by now there are people selling. There are people selling already. So when they move the market up, they'll take another profit here. And once they've taken profit again from this buy order here, the market will now move down again. They've used 30K here. Let's say they used 300K here. So they'll use another 300K here again. So they place a buy order, and then market will move back up again. And then they'll take profit again to move the market back down again. Yeah, and maybe now they will put in rest of the remaining money that is left from the £1 million or $1 million. Okay, and then once they've done that, so they take the profit here, and then now they will now use the rest of the money left to place another buy trade, and then the market will continue in the direction where it was before. Oh, sorry. So now the market will continue in the direction that it was before, ending the retracement. Okay, then uptrend continues. Okay, so this is how they manipulate the market. It's left for you and I to, we the retail traders, to get this knowledge, to get this understanding how the market is moved. Okay, so when this happened here, there are lots of people selling, believing, oh, the market has changed hands. Yeah, and the stop losses are above here. depending where you initiate your sell. Yeah, the stop losses are taken out quick, 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 quick. It continues the normal direction. So let's take a look at Aussie JPY 1 hour time frame to show you how what is actually happening now um, in a live market. So Aussie JPY, in my previous video, we spoke about higher highs and higher lows, uptrend. Okay, so this is actually Aussie JPY is actually in an uptrend. Looking at what is happening here, so you have a high, low, higher, low. So higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, so on and so forth. So, and then it got to here. Then the banks took profit of their trade of so they took profit of their long trade, their buy trade. So they buy from here. So it got to here. They decide to take their profit because they believe that they know, not that they believe, they know that a lot of traders are in these trades because it's been making higher high, higher lows for a long period of time. So a lot of people are in this buy trade. So they decide to take the profit here. And once they've done that, the market now move in the opposite direction, right? So the market has moved in the opposite direction. So when that happened, what did they do? Let me just zoom this so you can see it clearly. So when that happened, what did they do? They bought here. And then when they bought here, they moved the market up again slightly. They took another profit here. Market moved down. They bought here again, took another profit here. Market moved down. They bought again. Price moved up. They took profit again. And then the same thing happened here again. Price came down. Okay, so this is how the banks manipulate the market, deceiving us, the retail traders, taking our hard-earned money. Okay, so this is why it's difficult for people to be consistent in the forex market because the banks deceive us. So it is up to you and I to develop that knowledge to know what is happening in the forex market. It's up to you and I to read and have understanding of the structures that we see occurring in our charts. Okay, so that's why it's good to have, and I always say to people, develop your knowledge. Try to understand why the market is going up, going down, going sideways before you start trading. Backtest, do your backtest. This platform is free of charge. Tradingview.com is free of charge. So you can do your backtest before you start, putting your hard-earned money. You can have a demo account to build your skills. And then once you're happy with your skills, then you dive into the live market and start, trading your money. Yeah. So what are we expecting this week? So I cannot tell you that the retracement has finished. I cannot tell you that. Okay. I don't know if if there's gonna be one more push up and then back down before heading up. But what I know is that this is a retracement structure that occurs in the market. That's what I can tell you. It's a retracement structure. So now it's um, up to me and you to use our knowledge to identify a buy structure or uh, a buy signal, a candlesticks pattern that tells us to buy. So that is what we need to look for. when the market opens at 10 p.m. tonight. So from tomorrow morning, we will be looking to looking for a buy signal here. Actually, there's a buy signal already that has occurred here. Yeah, so there's a buy signal here already, candlestick signal here already. So it's a buy trade for me. Okay, and then we will target the beginning of the retracement. So that will be our target. Okay, and that is where the take profit would be here, 75.655. So when I said the beginning of the retracement, remember this is where the uptrend stopped before it came back down. So this is the end. This is the beginning rather of the retracement. So this is where we'll target, and then what we need to do is to wait for this to break above it. So once we take a profit here, we wait for a break above, and then a retest of this end of retracement to initiate a buy position again. So remember that you need to look for a structure. You need to understand a structure, have a good knowledge of it, because this happens in every time frame. So every chart, every currency that you open, you will see a consolidation or a retracement happening. Okay, so you need to know which one is, how to understand the retracement, how to understand the consolidation, and to understand that a reversal is actually happening, okay, in the market. But we will cover all this one after the other. So this is a retracement. The next video will be about consolidation, and then we'll talk about reversals. Okay, so I hope this video is useful. If you like it, give me a thumbs up. Subscribe to this video, to my channel for more content. Any questions, please leave a comment below, and I will try to answer all your questions as soon as I can, and to the best of my knowledge. Okay. I wish you a good rest of the weekend, and happy trading week ahead. Thank you. God bless. Bye bye.